Hey everybody, Josh Sigurdson of World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen. And have you been told that the stock market is booming, it's at all-time highs, it's going up and up and up, and it's not going to stop? Well, a lot of people will say, well, that's the Trump effect. Trump is fixing the markets, fixing the economy, fixing all these things. The fact of the matter is, Trump has no control over the overall long-term effects. And what's been happening for a long time is a bubbling of the stock market. We are seeing something like we've seen many times before, but on an even bigger scale. And we're going to go into that and go into the charts right away. But as this article from Zero Hedge says, Blackstone's Byron Wien says 10% to 15% correction in 2018 is virtually unavoidable. And as the article says, Byron Wien, the reliably bullish vice chairman of Blackstone's Private Wealth Solutions Group, changed tack slightly in an interview with CNBC Thursday. He now believes a 10% to 15% stock market correction this year is virtually unavoidable. Now, lest you interpret this call as a major reversal in Wien's long-held view that the market will continue its inexorable march higher, Wien quickly clarifies that he still believes the market will finish 2018 higher. So let me get this straight. It's going to correct 10 to 15% after bubbling at this rate for so long, and then it's going to finish higher? Well, that's going to take a lot of manipulation, Mr. Wien, and interestingly enough, as we went into previously in 2017, Dr. Ron Paul had initially said he believes there will be about a 25% correction. Now he's looking at a 50% crash, and that's a crash. That 50%, when it comes to the derivatives markets, when it comes to heavily manipulated markets, 50% is game over. 10 to 15% is game over for the short term as it is as well, considering how bubbled it is. A little dip like that will make a lot of difference. And John, you've got some information on this.
Yeah, I got some advice for you. Invest in the stock market for the long term. That's what I heard my advisors are saying. So that's what we're going to do.
Not. No.
No, sorry. Just a big joke here. But let's get to some serious facts here. I'm looking at the New York Stock Exchange margin debt and S&P real values. And if you look at this chart, you can see throughout the 2000s, early 2007, well, late 2007s, you can see how margin debt really peaked suddenly at a point. But it didn't really go over in the 2000s. It didn't really peak over a certain point, but then as you can see on this chart, suddenly it just became a lot more margin debt versus like how S&P started to go up. So clearly it's been run by a lot of margin debt, and margin debt is if you have, for example, a mortgage on your house, you can take a line of credit on your house, the new better value versus your loan. So if there's loan to value that's lower than the actual loan, you could take out line of credit on it. Same thing with your stock portfolio. You could take out margin debt, it's called, where you take out a line of credit on whatever X amount of debt you had before versus the new portfolio value. So you could take that out. And a lot of people are doing it. There's mass amounts. And if you look at this one chart here that shows the real growth, Josh, it's very interesting. It shows the real growth of the S&P 500 is 250%. Over a certain amount of time since 1995, and if you look at margin debt grew 420%, so that shows you X amount of growth in S&P 500.
Sounds like a bunch of
more and it took more and more debt every time to make more growth.
420% sounds like a whole bunch of really stoned investors to me. I mean, that's what you kind of have to be at this point to believe that this market is going to just continuously go up forever, as if we haven't seen this kind of collision point happen countless times before. And at this point, like, just the buildup of it, everyone's going, it's all great. This euphoria, as you kind of alluded to, is just massive euphoria. Like, everything's great, everything has changed, everything will continuously get better. And that is just so delusional. We're talking about an incredibly manipulated market that is just based in bankster puppetry and, the constant derivative nonsense.
Well, yeah, it's just not margin debt. It's also the debt, the share buybacks from the companies themselves to push up their value too, is based on that. They actually get into debt in order to use it to push up their value even further.
Yeah.
So All this is, it's just based on a mass amount of printing from the Federal Reserve. If you calculate in inflation from the stock market into real inflation, yeah, you would have a number that's way beyond the 2% that they say that they have in inflation in the United States. Now, it's not only the United States, it's all over the world. We've done several videos on the PE ratio, the price earnings ratio, the earnings of a stock versus the actual price of it, and the ratio of that. Norway was of course at the top with Italy and others, but the US is now also entering, like almost every major market in the world was above what will cause a correction in the price earnings ratio. So it's just showing you all this debt that have been slushing around from the policies of low interest rates have just shoved an immense amount that had never been seen in history into the markets from these central bankers, trying to get a wealth effect into the public because people feel a little bit richer. Meanwhile, you're seeing the big smart money has been exiting for the last year, and now the fools again are coming in.
Yeah.
It's the same old repetitive game here.
Well, absolutely, and like I was going into before with the euphoria, I'm just considering people like Jeff Berwick, our friend here at World Alternative Media, of the dollar vigilante. He knows a lot now, but he didn't always know so much, and he really lost, like his company was worth something like $250 million, and overnight, boom, gone. And we've talked to so many people in real life that have seen just tens of millions, even hundreds of millions of dollars wiped out in an instant, and leading up to that point, they're saying it's on all-time highs, getting greedy, it's all going to be good, and this kind of euphoria and speculation is very dangerous, and even has a lot to do, like I have to mention in this context as well, no matter what market you're talking about, even if it's decentralized, there's way too much euphoria with like altcoins, for example, and cryptocurrencies, like Dentacoin, which is based on dental hygiene, and it's like got over $1 billion market cap. These can't all survive, folks, and the euphoria for just the entire market, the market's going to prevail, but not all of them. Just like Google and Amazon survived the dot-com bubble, there's going to be big cryptocurrencies that survive, like these bubbles and like these worthless cryptocurrencies with no proper fundamentals that it's going to lead to a consolidation.
And the ICOs that are coming out, there's just like a mass amount of them coming out. And I saw Anthem Blanchard, one of our friends, he was commenting on it, saying that there's an awful lot of money getting shoved into companies with no finished product or nothing. Like there's nothing there really that they would complement. It's getting to it's the 2001 tech bubble all over again in the coin market, in the altcoins there, which is just like a massive
Not in
run.
general, because I do want to make mention, and we're going to see corrections and everything, but I mean, for the most part, like a lot of great cryptocurrencies. I believe decentralized cryptocurrencies are part of our future of money. It's a monetary revolution. It's going to be huge. It's only just begun.
It's different than the stock market. The a lot of the
fundamentals are way different.
The fundamentals are very different. It's actually a lot of them are focused on being money. A lot of them have great qualifications.
But then there's like Dogecoin, which is made as a joke that has no proper good fundamentals to it, and it's been years since they offered any new software update. It's like, why are you investing in it other than to be like, oh, there's a funny looking dog, I'm going to put my money in it and cash out big, and I'm going to put all my money into Ripple, which is being pumped by banks, and cash out big, and then, I'm going to get into this Dentacoin, dental hygiene coin, and cash out big. It's crazy. There's so many great altcoins like EOS, and there's Verge, so many. Steam is huge.
There's a lot of great potential in some coins, but people are just in this euphoric state, and a lot of people are trading now mass amounts of money, and of course they're following just not fundamentals, they're following the technicals, of course, and it just keeps on growing and growing and growing. I think they had a little bit of a surprise this year, like how they've just seen this constant massive meteoric rise, and now it's kind of slowed down a little bit. You can't see, like, it was just sorry, I almost said a swear word, but it was crazy in 2017 how much the coins increased in value. But you got to remember, it was also a reason because people are exiting from bonds, for example, that they had, and other investments, because they see a lot of risk there. They're coming into trying to find some place to hide and hold their value. So people are seeing that as well. But in the stock market, I highly suggest you guys go and look at a 1929 documentary about the stock market, that started the Great Depression. Really take a look at that documentary, and yeah, just the euphoria that was there is getting very similar to what we see today. So I see so many similarities of this massive bubble in the stock markets, and yeah, it's no doubt it's gonna crash. It's just, when is this insanity gonna stop? How long is the euphoria and the central banks going to be able to pump in money until it collapses?
It's so important that people understand what they're getting into, instead of just looking at like rooting for, let's cash out big, and that's really dangerous. So there's a lot of great things about the cryptocurrency market, and it is a future, but there's huge problems with like certain fundamentally flawed altcoins, and just like there are like pot stocks, for example. Yeah, you can make a lot of money at that, but when it's all pulled into this whole regime of gangster manipulation.
See, this is the problem. Nobody's looking at fundamentals. They see just, everything is going up, so they invest in anything and everything that's coming out there. They never look at the actual business. If you invest in something like stocks or whatever it is, you got to look at the fundamentals of the company. Like, how's their balance sheet? Like, what are they doing, the company? Yeah. And when you look at these gigantic, like Apple, Google, all these companies, they have been buying back their own stocks in order to prop up their rally. They stopped, innovating really, and they just, is that a massive stagnant, and they become monopolies because they bought up everybody, and technology is slowing down when we should be going so much faster.
Yeah, exactly. Well, and that's on purpose, but also just looking at the derivative exposures that we're seeing across the board, just insane, and just banks for manipulation, the connection with the central banking system, Federal Reserve, etc. It's just all coming to this inevitable end, and it's going to explode. And I really think it's important that people understand that they should not be putting their money where they don't know where their money's going. They should stay out of the banking system, stay decentralized as possible, be self-sufficient, self-responsible, financially responsible, because that's a hallmark of freedom. That's a hallmark of being able to ensure the safety of yourself as a human being, not as some subject of the government, the all-knowing, all-powerful government and banking system.
And again, education, know what you're investing in. You can invest in the stock market if you know what you're doing. I highly suggest you actually follow Gregory Mannarino. He's a fantastic...
Market Report,
the Market Report. He's fantastic at helping people actually, beating getting stolen from at the stock markets, because that's usually what's happening. He's actually helping people using the trades that the bankster use against them, which is fantastic. He's helping a lot of people, and everybody should take advantage of this and use it against them, but you also got to know the risks that are involved. So highly, you really got to educate yourself at anything you invest in, no matter what it is. Don't just throw money at it because it's going up. You're going to be very disappointed at the time, at one time, when you find out that what you invested in wasn't as good as it could have been, because you didn't educate yourself.
It's important. It's more important to get insurance of wealth anyway, rather than investing in these very hectic times.
There's
gold,
too much
silver,
risk out there. A lot of risk out there.
Absolutely. So with that said, we will continue covering this issue, as I'm sure we will. I mean, we've been talking about this for a long time, and it'll just continue, folks. And as we've said so many times, the fundamentals are off the table due to the level of manipulation in the markets and the monetary system. And that means that you cannot put a date on when things are going to happen. You just know things are going to happen. So just be prepared. It's better to be over-prepared than under-prepared. Until next time, thanks for going into this with us, John. This is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth.
Be the change.
Like what you see here at WHAM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so overwhelmingly demonetized and censored by YouTube, as the Anti-Defamation League comes in and flags all of our content as hate speech. You can also find me at Josh Sigurdson at steemit.com. That's steemit.com, the future of social media, where you get paid in the upvote of your post via Steem, the cryptocurrency. You can also find our Bitcoin address in the description and the comments below, as well as on the screen for you to scan if you please. And don't forget to come on down to Anarchapulco in Acapulco, Mexico in February, one of the best events of the year, and you can save money on your tickets by typing in promo code WHAM. That's WAM. We'll leave the link below for you, and until next time, don't forget to subscribe. This is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.